answering your tough financial questions for the past 26 years. It's Allworth's Money Matters with co-hosts Scott Hansen and Pat McClain. Can't get enough of Allworth's Money Matters? Visit allworthfinancial.com/radio to listen to the Money Matters podcast.
Welcome to Allworth's Money Matters. I'm Scott Hansen.
I'm Pat McClain.
Glad you are here with us on this broadcast over the weekend, but you might be listening to podcasts. Anyway, glad you are joining us as we talk about financial markets, investments, retirement. I mean, retirement is what we do. And
we're not going to talk about Bitcoin, though.
I was on my list of one of the things just to mention.
Was it really?
Well, both myself and my co-host, we're both financial advisors. Been doing this for 30 years practically. Been doing this program for 25 years. And we talk about all things financial. But here's what this past week, when Tesla announced they bought $1.5 billion worth of Bitcoin.
Which was it was mind-boggling to me that was an asset that a publicly traded company could actually. It's not anywhere close to a cash equivalent.
Well, that's what they're selling it as.
That's right.
It's so volatile. Like if you're Tesla, that's where your cash reserves are. Who knows what? I mean, no one's going to actually treat that as a reserve. No, that's right. No bank would, or other lender.
That's right.
That's not a cash reserve.
So, what did you think of that? And then
I thought it was Well, Tesla. First of all, I was talking to a young woman this week, and she was thinking about. She was asking me some investments. She was thinking about buying Tesla. What do you think of Tesla? And I said, I think it's a great company, but at what price?
Yes.
Like, what do you mean? Like no one had
what she had never thought about what the price is.
Yeah, I said, well, General Motors trades for about $9,000 per car. Tesla's like $1.3 million per car. So either they're going to have to start their production 100-fold from where they are today, or whatever.
Which is they have to manufacture every car in America in order to get to the same pricing as General Motors.
Or pivot to many different lines of business or something. I don't know. But it's so we already have this valuation on Tesla. And I'm thinking, are people buying Tesla as a way to buy Bitcoin? Because that's what, if I were an owner of Tesla or of any company that I just saw that they are taking the reserves and buying Bitcoin, like, is that the best use of your capital? If so, why should I give you my capital? I'll go invest in other things, or if I want a Bitcoin, I'll go invest directly in Bitcoin.
Fair enough.
Bizarre.
Yeah, really.
Of course,
but that stock
Musk is bizarre.
Yeah, it just keeps going and going and going. Tesla and Bitcoin.
Look, if you own some Tesla, fine. Do not bet your retirement on it.
Yes. Yeah.
Make sure you can sustain any losses that could come.
I would go as far as to say will come.
Well.
Anyway.
It is the strangest environment we're in right now.
It is.
It is the strangest. I just driving into the studio this morning, I was thinking, I mean, I've lived through lots of market cycles, and this one, it's the whole combination of lockdown,
right? So the economy
free trades.
Yeah, the economy is just really, I mean, there's two economies. There's those that are right, that are just thriving, and there's a whole different economy that is just sinking. My friends that own restaurants and hotels, just brutal. But they're like, I talked to one the other day. He's like, hey, I got that another check from the government. Like, how big? He's like, $400,000. Little restaurant owner. $400,000 the government just sent him a check for. Was it PPP? Whatever it was. $400,000.
So when the government just keeps printing money and showering on everybody, then there's more money to go around. What happens when the governments quit showering money on everybody? It's just the strangest time.
Yeah.
And I do think the free trading has added something. I saw an analysis. They were looking back to AOL. If you're under age 30, you might not know what AOL is. AOL.
They would send you these little discs in the mail for AOL, and you'd put them in your computer.
Oh, yeah, you had to download it.
And you'd have to download it.
And it would give you access to the internet through dial-up.
All right, for all those under the age of 30, that's how it used to work.
And you would pay for the time. So you would have some subscription. It would give you X hours a week or whatever dial-in. So you would dial up, do what you need to do, and shut the dial-up down. And they went to a new model, subscription model, where it was unlimited. And they weren't thinking, they were thinking it's probably not going to change that much because people only need to transmit so much data. What happened is the demand for their internet just exploded because it was apparently free to everybody, right?
Yes.
So the demand just completely outstripped supply, and they had some challenges they had to work through. But they were comparing that to the same thing with free trades. When it costs you nothing, like, why not trade all day long? I mean, if the blackjack tables, if you knew that it was a 50-50 odd and the house wouldn't eventually win, you're like, maybe I'll just keep trading away because now I don't have to worry about this tax I'm paying each time. I only have to make sure I'm smarter than the next guy.
But
they don't think.
In all fairness, there is friction in the transaction. It's just not transparent.
That's correct. Yes, of course. There's still a cost. They just don't see it.
They just don't see it. It's buried in there.
Yeah.
Yeah, there's
a difference between
the directed trade. Yeah. It's but my kids are, two of my boys are on that Robinhood all the time, with options, and I'm like, so you're trading options.
And how much money are they?
It's
whatever happened to someone had to be a certain amount of sophistication and all that stuff.
I don't know how much money. It's their money, so it's really none of my business. It's not my money, and I've poked at it a little bit to try to find out how much money they're actually in. But I have a relative, a young man is related to me. He's under 25. He made $9,000 on that GameStop. I'm like, are you still trading? He's like, no, I'm done. I'm done with that. But
really,
we're in silver now.
Okay. Really? That's how I'm done with that? But we're in silver now.
We're in silver now, yeah. It's interesting.
I mean, the thing about options, it's a zero-sum game. So if you earn $1, somebody else loses $1. It's not like buying into a company. If we buy Apple stock and Apple continues to grow and produce more goods and services, then everyone who owns Apple benefits. When we're trading options, or if we're just trading, trying to make a quick buck, the only way you
care about the underlying asset. You don't care.
Well, obviously, GameStop.
Yeah. It could be a rock. You're just trading on a rock.
Silver. It is a rock.
It is actually a good point.
I mean, I don't know the technical definition of a rock, but it is a mineral.
Yeah, I didn't do well in chemistry. But yeah, it's an interesting. But so you go back to this free trading, right? It's free trading. I believe you're correct that if they were charging $25 a trade, people wouldn't trade.
Not like they're doing now. And I don't think it's going to end well for a lot of these young people.
Oh,
the Robinhood, it's going to be the rich taken from the young. I mean, it's going to be.
So I had this conversation with my wife, and she said, "What do you think?" I said, "I'm glad they're doing it now." She said, "What?"
Absolutely. 100%
Why? I go, well, they could be 55, and it could be their life savings, and then they'll learn the lesson.
I tell you that, Pat, you bring up an interesting point because we've both been advisors here at Allworth for 3 decades, helping people as they're moving into retirement. That's what our entire firm does, right? And when someone comes at retirement and never has had any experience investing, maybe they got money through an inheritance, the first real big check, lottery's less common, but we've both seen those. The challenge is somebody's never actually experienced a loss, never made a mistake on an investment, or even bought a good investment that went down in value. If they've never had that experience, it is really challenging to coach them through that when they're age 55 or 60 or 65.
Scott, I think of this client of mine, husband and wife, in 2007, they got a pension lump sum, and he took the money and was buying real estate in Florida.
In 2007.
In 2007, right? We're in California. He's buying real estate in Florida. And he said to me, "You don't understand, Pat." Excuse me.
It's different.
He said, Everyone moves to Florida when they retire. You don't understand. And I remember saying to them,
how bad did those prices fall in Florida? 50, 60%?
50, 60%. I remember saying to them, you are betting your lifestyle, your secure retirement for the rest of your life on real estate, that even if it doubles, it's not going to help you. Your lifestyle won't change much. But if it goes in half,
particularly if you have leverage on it.
He had leverage. Debt. 3 years later, I remember introducing them to a bankruptcy attorney. And it was done, right? I mean, the retirement was...
And he took a pension cash out.
Took a pension cash out.
Thought he can do better than the pension plan.
And was buying real estate leveraged in Florida.
And he never had any experience speculating on real estate.
Never owned any rental properties ever. And I just kept telling him, this is such a dangerous thing. It's so dangerous. And he kept telling me I didn't understand. That's what he said.
Oh, we've heard that 100 times.
Right. It's
you hear it now.
This time.
You hear it now from young people.
Yeah.
Not just young people. I mean, I read some of these stories about people who are investing in some of these things. I think they don't really quite. And if you want to speculate and
go ahead,
take 5% of your portfolio or whatever,
have a good time.
That's fine. And a lot of people, we invest for lots of reasons. But don't bet your retirement on that.
Yeah.
And when you've got a certain portfolio, you've got an investment, understand what implication it would have on your lifestyle if that investment fell 50%, 75% or more.
Because it happens.
Well, we certainly saw it after the .com.
Yes. 90%.
And
anyway, let's move on.
Yeah.
This is depressing.
Well, it's not. I mean, it's
even the guys in the control room are crying now.
It's the challenge is, I'm concerned with is that everyday investors are going to get caught up late in the game, which is what typically happens, and it's going to have a negative impact on people's lives.
Yeah. I actually watching the market go up like it has recently.
I don't like it.
It's mind-boggling.
I love the economy growing.
Yes, but
I love the economy growing with stock prices falling. Okay, so that's the best.
As an investment advisor, why do you not like it when these stock prices are going up?
Because the underlying fundamentals are not going up at the same pace. So what's happening are people paying more for the same asset.
And
it's like a kid's lemonade stand that at one point in time was worth $1,000. Lemonade prices haven't changed. The demand for lemonade hasn't changed. The sales haven't changed, and suddenly it's selling for $5,000.
And everything reverts back to its mean, the average. So the further you get away in stock prices than the growth of the underlying companies.
Back over the last couple 100 years, 100+ years, we got good data.
Everything reverts to its average.
Yes, that's why I don't get excited when stock prices rise without underlying fundamentals. Yeah. That's why I love a growing economy and a falling stock price. It's the best thing ever.
Yeah,
they're continuing to get more valuable but less expensive to buy.
Yeah, well,
you got to make sure you got to make sure that you have things at the right price.
Yeah, and this is a weird environment. I mean, the government giveaways. I just don't understand why inflation isn't. If you worry about anything, I worry about inflation.
I do too. Particularly as a retiree, like you make sure that your portfolio is set up in such a manner that if we ever have rampant inflation, like real inflation.
Which means you have to own equities, stocks.
How else do we pay off these trillions of dollars of debt that we could continue to
I don't know. Print? What is it now?
25 trillion or so?
No, but since the beginning of the pandemic, 5-6 trillion?
It depends when this next bill passes. Yeah. Another $1.9 trillion.
A lot of money. I don't know where you grew up. Where I grew up.
$1 trillion. A lot of money. All right, if you want to be part of the program.
$1 billion here, $1 billion there. Pretty soon it adds up to real money.
That's right. We don't mean to be nervous Nellies about, but
Scott,
when there's lots of euphoria going on, that's when you need to be careful. That's when you need to make sure that you've got the right kind of barriers around your portfolio, that things are structured in such a manner that you're going to be able to withstand whatever storm could come. When things look horrible, that's when there's less risk.
Oh, yes. Oh, yes.
All right. If you want to be part of the program, 833-99-WORTH will get you on Allworth's Money Matters. And we're going to talk to Rand. Rand, you're with Scott Hansen and Pat McClain of Allworth's Money Matters.
Hello.
Hi, Rand.
Oh, you do hear me. Great. Well, it was very interesting to hear you gentlemen speak about the market and real estate, because the reason I'm calling is to help my son. He's been working 20 years and he doesn't have a pension. He's an optometrist. He just works for another optometrist, and with no pension there. And with two kids, the general situation, he's going to be 50 years old. And my idea of helping him would be to help him get into a house, real estate, perhaps in Florida.
Well, no, we're not saying anything negative, but it had to be the timing, and someone bet everything on Florida. So,
yeah. Well, the thing is, like I say, he's going to have to work till he's 100 years old to retire. And my concept is, if he were to buy or purchase a house, put it this way, a down payment that he can easily afford that at the moment. He's got a girl going to college. And
can you afford to give him the money for a down payment?
Or does he have the money himself?
I think he's got the money himself.
Okay. All right. And so what's the question for us?
The question is, my concept is that if he were to buy something, and if I were the tenant, if I were to move it, when I say buy something that he likes and perhaps in the future either live in or sell it. It's up to him. But I would be the tenant that would give him the guarantee that the rent will be paid, the mortgage will be amortized, and the increase in value at that time, should I live that long. But anyway, the idea would be that he would have something at least comparable to a pension or something.
Well, does he own a home now?
Yes.
Oh, yes. He has a home right now, and my idea would be for him to get to do a home equity loan for the purchase of that.
Got it.
So do you own a home today?
Oh, yes. Okay. I live in Northern California, and I have a nice 3-acre house.
And how many children do you have?
I have two, my son and my daughter, and they have each two sons and daughters. And I've already given them $100,000 each for their education, and they're fine. As far as my conscience is concerned, they're clean. But my daughter's working for the county with her husband, and she's got a husband,
yep.
and they're going to have pensions. But
they are.
Son,
and your son won't have a pension. By the way, most Americans will not have pensions.
Yeah. If you work for a private employer,
you're
90+% chance you will have no
well,
pension.
you're talking to somebody that really hit the jackpot, because I worked for aviation for 35 years.
All right.
And I was lucky to come out with a pension. No big deal, nothing much. But between this pension and my Social Security, my wife and I are fine.
But remember, when you worked in aviation, there were price controls, and it was deregulated under Ronald Reagan. Yeah. And that's why you had pensions. But it's right now, if you worked in aviation, the chances of you getting a pension are close to zero.
No. It's all broken up.
Yeah, that's right. And by the way, just a little bit of personal there. The deregulation of the telecommunications in the aviation industry was bad for the employees, but great for the consumers.
No question.
Yeah.
Right?
Yeah.
I don't worry about what time I call my grandmother.
Yeah, you didn't have to call her after Sunday night at 10 o'clock, right?
Whatever.
That's right.
Yeah.
So I don't know if this is the strategy I would be using for my son. And by the way, if you have it sounds like you have ample assets. You already gave them $100,000 each. His retirement may be your net worth, his inheritance.
Yeah, well, I don't want to give him anything. I don't want to give him my daughter anything. I want it to go to the grandchildren.
Wow. Okay. Well, that's your call. I wouldn't be attacking his retirement problem with leverage on a rental home.
No.
I just wouldn't. I think that you're complicating it. You have two children. You're going to create animosity between the two.
Yeah, there's that. That is complicated.
I wouldn't. You know what I would do? I wouldn't worry about his retirement. He's 50.
But I still would like to live in a house in Florida.
Okay. Well, go get a house in Florida.
Well, go get a house. Rand, you're rich in many standards. You gave $100,000 to each one of your kids.
Now I'm broke.
Oh yeah. Well, all right. No one's crying for you. No one's crying for you.
Here's the hard thing, right? And sometimes our hopes and dreams for our kids are not their own hopes and dreams for their own lives, right? So you look at your son, you're like, you're 50, you don't have any money saved for retirement, you're worried about it.
He may not.
He may not be, or not worried enough to change his behavior.
That's right. And
he is. He's contemplating it.
Well, he just needs to start saving.
Yeah, listen.
I never had a pension either.
Yeah, but the reality is you own a home. You're living in a home. You would... I don't understand the mechanics of you actually renting a house that he owns.
To guarantee a tenant, essentially.
Yeah. It makes,
yes, that's basically it. To guarantee a tenant.
I don't understand it.
It would be a nice place. Well, that would give me a nice place to live for the few years that I have remaining.
Well, but then sell your house and move to buy a place of your own and move there. Why? I don't know why you have to involve your son in it.
Well.
You asked for our opinions.
Yeah, so we gave it to you.
Yeah,
I wouldn't worry about him.
That's okay.
I wouldn't worry about him.
Yeah.
I wouldn't worry about him.
But I do.
I get it. Look, as a father, I get it.
And his two kids.
That's right.
So,
listen, I have 4 children myself. You
They're
worry
all
about them. You worry about them every day.
Oh, yeah.
You worry about them every day.
Well, okay, then I'll just have to. I was even going to ask, would it be profitable? Not profitable, but logical to come up with the ownership of a house like that under an LLC?
Yeah, it doesn't matter how you.
You just told us you don't want any of your inheritance to go to your kids. You want it to go to the grandkids.
And then you just said that you were going to actually set your son up in an inheritance.
No.
Well, that's what you were doing, but understand. But you were going to be the renter of the property to guarantee tenancy.
Right.
Which is the same thing.
Yeah, that's true.
Yeah.
That's true.
So Rand, enjoy yourself. Move on. You're not going to change him.
Listen. I've been married for 56 years.
All in a row, by the way.
Have you changed her?
Have you?
No. Happily married for 3 years. But
hey, Rand, it's been a pleasure talking to you. So I wish you well, and glad you have such care.
You guys keep up the good work, enlighten people, and you know what you after being retired for 23 years. I'll tell you, it's no euphoria. It's nothing that much to look forward to because you don't go out that much. First of all, it's you get older. It's like hitting a brick wall at 75.
Rand?
Now that I'm 81, forget it. It's all over.
You're done. You're done.
Yeah, you're done. Exactly.
It's awful, Rand. You're killing me.
You're going to start singing anytime.
You've got today, right?
All right.
That's all we all have. So,
all right. Thank you, Rand.
I appreciate it.
Thanks for listening to our show.
All right. Thanks.
All right. Bye-bye.
All right. We're coming by you. We're going to go hang out with Rand later on today.
I would enjoy hanging out with him. He sounds like quite the character.
We're going to go down to Denny's and have a cup of coffee. Maybe some Sanka.
Grand slam.
I'm going to have a grand slam and a Sanka.
I haven't been to a Denny's in 20 years.
I know.
They're still around.
Ever since I lost my trucking hat, I haven't been able to get into it.
You know, it's interesting. I truly believe that we are born with certain kind of characteristics that make us good savers or good spenders.
Oh,
big spenders.
You have 4 children.
That's right. So
They're
I look at
all different.
Oh yeah, my oldest 2. Even when my son was tiny, I remember he had like a gift certificate to Toys R Us when Toys R Us used to exist, and we were there. I kid you, it was like almost an hour, and he couldn't find anything that he wanted to part with his. We left. He didn't get anything
because it was that money was so
valuable.
He
wanted to keep that. My daughter's the opposite.
She's leveraging the gift certificate.
You know, they had when they came out with the first relief bill or whatever, and during COVID, she was a college student and didn't have a job. So she talks to someone at the unemployment office. They said she's gonna get $13,000 in back pay.
Really?
Which she hears, right? My son got quite a bit.
She hears it.
Someone tells her this. So she goes and buys some new furniture for her apartment.
Before she even gets a check.
And guess what?
She never got the check.
And
Really?
I laugh. She tries crying to me. I'm like,
yeah.
I just kind of watch it like, hey, you're going to have to learn some way. And she might be 50, like grandson, broke, and
happy. Who's to say it? They're not doing the right thing and we're doing it wrong.
No, because there's always a health issue that can take us out. Lots of things that
look. I am the persuasion to save. I mean, day one.
Well, and we never know what tomorrow brings, and being at a point where work's an option and not an obligation. Maybe that's a luxury when you're younger. It's not when you're older.
But isn't the retirement thing just a strange concept to begin with? It's a strange. To me. Right, I help people plan for retirement. The idea that one day you just check at the door and kind of float away, I just think it's wrong.
Well, most people aren't viewing it as that's what they want to do now anyway.
That's right.
They don't want to. They don't want the date.
They don't want the day-to-day grind.
Yeah,
but it doesn't mean they don't want to be engaged in some form or fashion.
That's right. So, all right, we're going to take a break. When we come back, we will continue on with calls. Again, the number to be part of Allworth's Money Matters, 833-99-WORTH. You're listening to Allworth's Money Matters. We'll be right back.
Would you like an opinion on a financial matter you're dealing with? Whether it's about retirement, investments, taxes, or 401ks, Scott Hansen and Pat McClain would like to help you by answering your call. To join Allworth's Money Matters, call now at 833-99-WORTH. That's 833-99-WORTH.
Welcome back to Allworth's Money Matters. Scott Hansen.
Pat McClain.
And let's go right to the calls. Let's talk with Richard. Richard, you're with Allworth's Money Matters.
Hi, thanks for taking my call.
Yeah.
I have a relatively simple question, I hope. My fiance and I each own a home in Northern California, and we have, between the two homes, about $500,000 in unrealized capital gains at this moment.
In each or combined?
Combined.
All right, and are they primary residences?
Yes.
Okay.
And so my question is, to avoid paying capital gains taxes on them, since it's two separate properties, are we going to have to stagger the sales 2 years apart?
Do you plan on selling? And the rules have changed a bit on that. Do you plan on selling both homes and getting a new home?
But they're fiancé. They're not married.
I understand that.
Yeah, we plan on selling both homes and getting a new home. Although where and when on the new home are not fixed yet.
So what is the exclusion, Scott, for, is it
250,000 individual, 500,000 as a couple.
Yeah. So what are the gains in each one of the homes? Break it down for us.
Is it roughly equal?
No, one is in the 75 to 100 range, and the balance is in the other one.
So 400 in one and 100 in the other.
Yeah.
And I would sell the one. I would sell the one prior to marriage with the smallest gain, and then sell the other.
I don't know. Is that how?
I
have no idea.
I would pay a CPA to give it a.
That's right. I have no idea because it was brought into. It became a marital asset and it was separate.
I mean, so your situation here, you're trying to figure out the best way to minimize the taxes.
Well, we know the one way is to sell the one that's got the $100,000. That's a no-brainer. But then, do you take that one with the 400,000 and make it a marital?
We're not an expert on this area of the tax law, but there's some areas of tax where it's coming unclear, and then you kind of step back. Well, what's the policy? Like, what's the intent of the law here, right?
I would go to I'd pay for counsel. Yeah. I wouldn't call a radio show to ask this question.
Well, I mean, it's a big enough deal where you'll want to talk to it.
So the initial blush is the one with $100,000. Sell that.
But the question is, you probably need to wait 2 years.
Probably become a marital asset.
Because otherwise, it wasn't both of your primary residents, only one of your primary residents.
That's
My
right.
guess would be there's already something in the code because not always married couples don't always live together. Sometimes one lives on the other side of the country.
How's that work?
Well, I don't know how it worked, but you know people. You've met people like that.
I don't know. I'm just thinking about it. Yeah, I'd go to an accountant. I agree with Scott. From what we know of the code, it was you probably have to live in that second house with the $400,000 in gain for a couple years in order to make it a marital asset. But I'm just guessing on that. I would go to an accountant and I'd pay for advice.
Okay.
And not only that, sometimes look when you pay for an advice, if you get incorrect advice, let's say the IRS challenges sometime in the future, and you're like, wait a minute, I got this advice. You could prove that you received this advice. You're able to. You
still pay the taxes,
but you don't pay the penalties.
You pay, the penalties are negated.
So
that's where I'd go with that.
Yeah, appreciate the call. You know, it's interesting. It reminds me, Pat, years ago, 20 some years ago, there was a neighbor of mine that had worked for Intel and had like $25 million worth of stock.
Really?
Yeah. Came in.
What kind of neighborhood were you living in?
Not that fancy. It was just he had worked at Intel. This is back in the day when Intel was a hot. Yeah. People don't think of Intel like.
It was. Remember, it was just. I mean, it would double.
It was
time
one of the
and
hot
time
stocks
and time
at the time.
again,
Just
right?
whatever the hot stock is today, that was Intel back in the day. And then it hadn't been for the last 20 years. But
Yeah,
it was during the day.
Was.
So he was an engineer. He was one of the earlier guys. And
$25 million.
25. So he came in and chatted with me about something. And then he was thinking about moving to Nevada. And I introduced him to a tax person in our office at the time, 20-some years ago. We had a 5-minute conversation with him. That was it. Didn't hire us, didn't hire the accountant. 3 years later, he calls me, I forget the time frame, calls me, living in Nevada, he'd moved to Nevada, and says, hey, Scott, are you familiar with the fact that the state of California will tax the increase in non-qualified, I figure it was the ISOs or NQs at the time, the increase in the stock options while employed, while you're a resident of that state, they want the taxes on whatever that increase in that value was.
They call source.
Even when it wasn't realized at that time.
Oh, I didn't know that.
He moved to Nevada, sold the stock later.
Wait. You have to pay that even though you didn't realize the gain.
That's correct.
I had no idea.
Yeah, you did. You just forgot.
Okay, thanks. I probably did.
I know we've talked about this before. But so he wanted to kind of like, what conversation do we have about this in your office? I'm like, it was 5 minutes. Like, what he was hoping to get is some sort of proof that he sought out counsel and received bad counsel because of the penalties that the franchise tax board was charging him. And I remember at the time thinking,
he didn't pay for it.
I'm thinking, I thought, you fool. I mean, like, you was such a large amount, and you were too cheap to pay for quality advice, and look what it is costing you. Not only did you not know a provision that you would have.
And the accountant would have researched it and told him and charged him $500 or $1,000
whatever,
for it or whatever the number was, right?
Yeah, that's an hourly rate, wouldn't be big.
So he took the hit.
Oh yeah. Sometimes it pays to get counsel.
Well, and think about that. So you didn't realize the gain. You pay the taxes on it, and that stock just tanked. And you can't go back to the state and say, give me back the money that I paid on this gain that I never realized.
The tax wasn't triggered until he actually realized that gain in Nevada.
Oh, that's okay. That makes sense.
So it wasn't,
I do remember this.
It wasn't that once you moved, they said you owe some money.
It's a California source tax.
Essentially. And it still happens. It can happen on profits, interest, and other things as well.
That's right.
So anyway, let's take back the calls. 833.
But you got to feel good about that because California is building this incredible light rail system, high-speed rail in the Central Valley. You really got to feel good about paying the taxes.
I'm going to be able to go all the way from Turlock to Fresno.
Right. And for the rest of
at maybe 120 miles an hour, except when I'm going into small towns when I got to slow down.
So for the rest of America, we are in Sacramento, Central Valley of California. Beautiful place to live. High taxes. Government that has run amok.
It is some of the stuff they keep coming up with.
And they're building
you see San Francisco school board? The kids aren't in school, but they decided to change the names of 44 different schools, including Abraham Lincoln.
Yeah.
He wasn't good enough. And instead of getting the kids back in school.
This is a good use of your time.
Anyway, let's get back to the calls here.
The dam's breaking, but let's just make sure the flowers in the parking lot are nice.
Yeah, that's kind of what it feels like here.
Right? All right.
Let's try not to get too political on this.
I can't help it.
Well, some of the stuff is just so crazy. How can you not?
Yeah, you just got to shake your head. You just shake your head.
I would love to have a phenomenal rail system in this country. I've been to Japan, man. It's unbelievable.
But Scott, the reality is self-driving cars will be here in 10, 15, 20 years, and it will change the way we travel. You
much
will be
safer,
able,
much faster.
Between New York and Philadelphia, there will be a van that's a 20-passenger van with a bathroom on it that leaves New York every 15 minutes to go to Philadelphia. It's going to happen.
It's called the Greyhound. Leave the driving to us.
Oh, it's a window seat to America.
All right, let's
Have
talk.
you been on a Greyhound lately?
I used to have to in junior high. My parents were divorced, and so they lived about 2 hours apart from each other, and I have to take the Greyhound bus.
Did you?
It was terrifying. When you're fifth grade or whatever, there's some freaky people back then on the Greyhound bus.
On the Greyhound. I took a Greyhound from Sacramento to Seattle. It left at 11:30 at night. When I was a junior in high school. All I could say is I apologize to all those people sitting around me.
Yeah, all right. Let's talk with Neil. Neil, you're with Allworth Money Matters.
Hey, good morning, gentlemen. Thanks for taking my call.
Yeah, glad you joined us.
Hey, the reason why I'm calling, I'm just curious. I've got a vacation rental that I owe money on. Of course, I've got a mortgage on a year. It's a decent rate, 3.675 or so. It's not amazing compared to today, but it's pretty good.
And what do you
I owe about $180 on it.
And what's the value of the home?
About $550.
Okay, and then
do you use it as well, or is it pure rental?
I use it periodically, but not much. It's more a rental, kind of a vacation rental.
And
one of those online things, of course.
VRBO or something.
And do you own it primarily because you want to use it when you want to use it, or you own it because you think it's a great investment?
Yeah.
Okay.
Well, it's both. It's been a good investment.
And I know it has
for about 7 years.
Yeah, but historically they tend not to be as good investments as other kind of rentals.
That's correct.
You lucked out as the property appreciation of.
But if you're using it for your own, pleasure,
that's a different story.
Tell us about your primary residence. What's that worth, and what do you owe on that? What's the interest rate?
It's worth about $1 million, and so I'm 56.
And what do you owe on the home that's worth $1 million?
Nothing.
Okay,
paid off.
All right. So
what do you have in savings? In other words, do you have $180,000 in cash or cash equivalent somewhere?
Well, that was the primary reason for the question. Money in my IRAs is about 110 sitting around, sort of in cash. There is stock there. Obviously, I've got about 75 in stock percent.
But it's all in your. Do you have money outside of your IRAs?
A little bit, yes.
Not 180,000 though.
No, I don't. So I would have to borrow from the IRAs, and that's the primary question.
It doesn't work. No, it's not going to work. It just won't work.
Oh,
first of all, let's say you used your IRA. Well, if you had $180,000 in an IRA, technically you could use it for as the mortgagee on a property, but only if you had zero personal benefit from it, which means you couldn't use it, at all.
And it's not worth the hassle. Here's what I would do. I would call a mortgage broker right now, and I would look.
Do you plan on owning this thing for a long time?
Yeah, I think we're going to keep it.
Okay.
We really like it.
I would call a mortgage broker right now and see what the cost of money would be on a first mortgage on my primary residence.
You plan on staying in that house for a while?
Yeah, we're going to stay here.
Yeah, that's what I would do too.
Yeah, and so my guess is you're going to get sub 3 at zero cost.
Or 2%.
Yeah. Sub 3.
15 years, they're 2% right now.
Right. And so I would move the mortgage off of the vacation rental into my primary residence. and lower the interest rate and get a 15-year loan on it.
Okay, I hadn't thought about that. It's a good idea.
Thank you. That's the easiest thing to do, and quite frankly, the cost of money is lower on a primary residence than it is on a rental property.
You might lose the tax deductibility of that. You're still going to be better off because of the cost of money.
Yeah, that's right.
Okay.
Why would you lose?
Beautiful.
Oh, because
it's
of
probably do you itemize your deductions, or you take a standard deduction?
We itemize.
You still item? Okay, then yeah, that would definitely make sense for you.
Do it.
That's what I do. Let me ask you, how do you have any sort of 401k or pension for retirement?
Yeah, we've got a pension of about $50,000 a year approximately.
Okay, you got pension money coming in.
Yeah, because your 401k balance isn't very large.
Your IRA,
yeah, your IRA is not very large. It's sub 200, correct?
Well, I mean, total. No, if I were to look at all the investments that I have that are within 401k and outside of that, not 401k, but IRA money, we're talking about right around $2 million.
Oh, okay. Perfect, beautiful. Thank you.
We were just a little worried that you were.
Yeah,
this vacation property, which is great. No money in retirement. But your home's paid off, which is great.
Yes.
A lot of equity there.
Yeah. No, great job. Great job. Yep. Just refinance that, put it on your primary residence, 15-year fixed, or 10-year fixed.
And I'm just trying to work on getting it paid off by the time you retire, if you plan on keeping it long term.
Yeah. Absolutely.
And the thing you I don't know where this is located, but Scott and I at one point in time owned a vacation property together. And what worried me is the legislation around the VRBOs. Right?
You mean?
So if you look at certain areas in the United States, they've outlawed short-term rentals.
I own a vacation home, not one that I use.
I know, but are you not worried about the how they've cracked down on short-term rentals?
No, because I figure if it changes, they'll just sell it to somebody who wants just to have it as their own
All right.
residence.
Well, good enough.
That's what's really the value of the homes.
Good enough. All right. Anyway, appreciate the calling you.
Yeah, but I
Thanks,
also
guys.
thanks.
Good show.
I appreciate that. I also realize it's I had multiple reasons why I bought the thing, so it wasn't pure investment. But trust me, every time I hear it takes any sort of work from some email I got to think about, I'm like, why do I own this thing?
Yeah, whether like the roof's leaking or
whatever things happen. Yeah, I got to replace that. This needs to be done.
And you're not the property manager on it either.
The hot tub's leaking. The refrigerator needs to be replaced.
I don't know how you do it. Life is such a struggle.
No, I mean it is.
So I was talking to a friend of mine. Today on the way to the show, and we were talking about starting in business, and I said, I remember, it wasn't 30 years ago that I was driving around in a Hyundai that I bought at a repo lot.
This is when Hyundais were
cheap.
Right now,
are they expensive now?
Well, so they've got nice ones. It's not just they've got. It's a nice. It's just like when Datsun started, right? It was a little
Datsun.
tiny, and now look what Nissan's got. All kinds of great cars.
I had a Datsun for a while too. The B210, the Honeybee.
You didn't have the Honeybee though, did you?
No, I had a Datsun 510.
510.
Yeah, the 510, 4-door.
A little bigger than the 210.
The 510 was a 4-door 510.
Okay, where were we going with this?
I completely forgot. Oh no, about this. People go through economic. There's a path, economic path.
Yeah. Anyway, what do you mean by economic path?
Well, you mature. Your economics hopefully mature over time. Right. The idea that you own a rental home that's a vacation rental home, you would have never imagined it 30 years ago that you would own that.
Oh, that was your point.
Yeah. I actually the story did have a point, so that was valuable. But people go through economic, and you watch your kids go through
and it's a funny thing, Pat, because money is a strange tool. We all need some degree of of finances, of money. We all need some money.
It's how we exchange our labor.
Well, you need money to have a roof over your head. You need money to have food on the table. The biggest, like, basic needs, right?
Yes.
And maybe some health care. We could throw that in there. That takes finances, takes money. And so when you're young, people are young and starting out, it's like, typically you're pretty broke. Like, I got to figure out how to support myself. My parents provided the roof and the food. Now I got to figure out a way to provide for my own roof and my own food. And you're out there kind of hustling to make it, whatever you got to do to make it happen, going to college, get a job, working hard.
And learning through the whole process.
And then there's that, well, I'd like to, maybe a little nicer house would be good for me, or it'd be good to own a house, or a little better car would be good, or maybe I need like a stereo system would be good. Like, I mean, and suddenly what the basics of the roof and the food, those quote unquote needs start becoming greater.
The word wants and needs gets confused. There's wants, but people oftentimes say they're needs, and they're not needs, they're wants, right? Because needs are food and shelter on the most basic level.
That's right.
Everything after that is a want. And it doesn't mean food and shelter is a 4,000 square foot McMansion somewhere. It means
that's right,
food and shelter.
But the thing, I think what ends up, we're financial advisors. So we talk with people, typically people that are good savers.
Yes.
Because if somebody doesn't save anything, there's not a lot we can do.
I'm not going to change them. I used to try when I first started in the business. I thought
Dave Ramsey does a great job of that.
Oh, excellent.
He really does.
Excellent.
I don't agree with him 100% of things, but I don't agree with most people 100% of things. Not even myself. But most people we encounter are good savers. But the thing about this, the security that money provides, it's somewhat fleeting because, to your point, when I was a kid in college, having a rental vacation home was not something I've ever planned.
It never even crossed your mind.
So in some aspects, I could say my financial resources are probably greater than I had, maybe I'd hoped for, because everyone hopes, but probably greater than I had anticipated.
Okay.
But the thing about finances and money, there's really never quite, if that's your goal, there's never quite enough of it. Like, I've never had a client come and say, you know, Scott, I don't need any more than this. Don't bother growing it at this point. I'm set.
Can you imagine that?
No, because if someone's goal is to have 100,000, you hit 100, then it's 200, then it's 500, then it's 1 million, then it's 2 million, or whatever the number is, right? And it's just part of that human nature. And it's even when people get past the point where it's way beyond their basic needs being met, and it's way beyond their wants being met, most people still aren't quite satisfied with the level of their financial resources.
So Jeff Bezos and Bill Gates.
Most people. To them,
they have, but Scott, to the point, they have what's called a private office, which is they set up a family office, which is their own investment advisors that continue to invest their dollars. What do they buy? Well, they'll buy stocks, but then they'll buy hotels or strip centers or malls or whatever, all kinds of things.
Diversified all over the place.
Even at that level, they're not putting it in a bank account and hoping for the best. They are deploying the capital.
Well, it comes with a responsibility.
That's right.
At some point, I mean,
but so when you
steward the assets,
when you go through this cycle, my son, who's 25, lives in Denver, is buying a home. He wants to buy a home. So he calls me yesterday and says, hey, you know, I got some questions.
My daughter lives in Denver. She wants to buy a new Toyota 4Runner on credit. I said, good luck to you there. So she sends me photos of him.
Really?
She's hoping her daddy's going to buy her a new car.
Oh, she's trying to get you.
Not happening.
She tries to get you involved in the Toyota 4Runner.
She wants me to buy her a Toyota 4Runner.
You know, like you just laugh.
It's not going to change her life.
And she doesn't listen to this radio show, so she'll never know.
Correct. It won't make her life better.
No. In fact, it's so he wants to. So he calls me yesterday, and this is just an education. He says, Dad, I went to school with this guy, and he's now a realtor, residential realtor, and I'm going to hire him to find me a home. And I said, well, what does that mean? He says, well, he wants me to sign a contract. I said, well, let me ask you this question.
What?
Right, that's exactly right.
As a selling agent?
As a selling agent or a buyer's agent. A buyer's agent. And so I'm like, okay, well.
What's the contract? That you're going to guarantee to pay me if you buy something in the next 6 months or something?
That's right, an exclusivity contract.
For representing a buyer?
For representing a buyer.
I've never heard of such a thing. Is that the latest thing now?
It must be. I mean,
I'm happy to. Well, you don't even need to really drive around to look at houses because you can look at most of the stuff online. They have all kinds of great videos and stuff now.
And so the part of the learning process, this is my point, part of the learning process. So he calls and he goes, what is, so he never bought a house before. He doesn't know how the transaction, he just thinks this is normal.
He might have studied it for a couple hours in college. He might have slept through the class.
Yeah. So my son.
Unless it's in front of you.
Yeah. So he's 25. He's got a business degree. I think he's a pretty smart kid. He is my son. So I'm like, don't sign it. He's like, well, no, he wants me to sign it. I said, of course he wants you to sign it.
You'll get a nice commission if he actually helps you solve your problem.
That's right. And I'm like, this is why you should not sign this exclusivity buyers. I said, you're driving down the street and you see a home that says for sale by owner and you buy it. That contract may obligate you to pay him a commission, which will increase the price of or if you go to a new development, and there is no broker co-op fee, you will end up paying this guy for doing nothing. And he said, well, why would he work for me? And I said, because, he'll do it. I said, he will work for you. I said,
if not, go get a different agent.
Right?
I'm not going to sign exclusivity, but I want to buy a house. Would you like to help me?
Yeah. Anyway, but it's the financial education is really important.
It is important.
He didn't know any different. My son didn't know any different. He thought this was just normal.
That's why, to your point, we talked earlier in the program about Robinhood and these trading. I was talked with a young woman this week. I actually encouraged her to buy some stock. She's got an account at Vanguard. I said, take 5%, buy some stock. She said, what do you recommend? I said, I don't recommend anything because I don't think it's going to be helpful for you long term. I think the most important thing that you're going to learn from this is the education. Through this. And it's great to do it when you're young. But anyway, we are running out of time. I think we've had a good program today. Anyway, this up in the next coming week or two, we've got our retirement planning for couples workshop, and it's going to run Tuesday, February 16th through Thursday, February 18th. Again, retirement planning for couples. It's a special workshop for couples running Tuesday, February 16th through Thursday, February 18th, of course, virtual. But it's fairly well done. It's not just a boring video one way. I think you'll get something out of it. Just go to allworthfinancial.com to learn more. And, of course, if you'd like to get a copy of this podcast and listen to it anytime you want, you can get it right wherever you listen to podcasts or allworthfinancial.com. We're out of time. We'll see you next week.
This program has been brought to you by Allworth Financial, a registered investment advisory firm. Any ideas presented during this program are not intended to provide specific financial advice. You should consult your own financial advisor, tax consultant, or estate planning attorney to conduct your own due diligence.